Hello, everyone. Thanks so much for joining us today. We have a very relevant and timely topic that we're going to be discussing, namely Safe Harbor 401k, making you the expert. We are Ubiquity Retirement and Savings. My name is Sean Killingsworth. I'll be taking you on a deep dive into Safe Harbor and exploring how it's relevant for you as the financial advisor to your potential 401k clients. Without further ado, let's hop right into the agenda. First, I'll explain what Safe Harbor is, how it works, and why it's important. Then I'll review some of the key advantages for the participant, the plan sponsor, and you as the advisor. So you'll be learning some of the key reasons why people get Safe Harbor to begin with, after which we'll move on to some of the essential benefits of any 401k plan, whether it has a Safe Harbor provision or not. Next, I'll share with you the key deadlines for the year. And finally, I'll give you a brief overview of Ubiquity and some next steps with contact information on how you can move forward. Many of you probably already have a sense of what a safe harbor provision is in a 401k plan. But for those of you who don't, it's a type of contribution made by the employer into an employee's 401k account. This amount is predetermined and normally represented as a percentage of the participant's salary. The most common form of a safe harbor contribution is a match, meaning the employer is only responsible for contributing when the employee does so too. We can see right here in the first section two common formulas that employers often choose from to figure out their 401k plan safe harbor matching contribution, whether it's a dollar for dollar match on the employee deferrals up to 4% of their annual income, or another match, which is the dollar for dollar match up to 3% plus 50 cents on the dollar on the next 2% of the employee's salary. You'll also see here that another choice is what's called a non-elective contribution. And that's when a plan sponsor decides they want to make a safe harbor contribution to the employee's account, regardless of whether or not the employee makes their own contribution. So that brings us to a critical question. Why would a plan sponsor include a provision for a safe harbor match to begin with? This is an important point to address because it opens up the broader topic of how everyone benefits from a safe harbor. We'll start off with the employee. I think the advantages here are pretty obvious. Number one, it's essentially free money that the employer is depositing into their retirement account. Secondly, it can incentivize the employee to increase their savings rate. Let's say I'm an employee and I have a 401k plan. I'm only inclined to contribute 2% of my salary to my 401k. But if I know that my employer will match up to 4%, it's much more likely that I'll feel compelled to elevate my own contribution amount so that I'm not leaving any money on the table. One more advantage for the employee is that these employer contributions are immediately vested. This means that as an employee, I'm always entitled to my employer's contributions immediately, and they can't subject the receipt of this money to a vesting schedule. For those of you who don't know, a vesting schedule is pretty common with profit sharing and 401k plans, where the employer can require that the employee work at the company for a certain period of time. That might be 1, 2, or 3 years of service before they're eligible to fully own the profit sharing contributions. With a safe harbor match, the employer isn't allowed to do this, so the employee owns that money right away. Now let's talk a little bit about the benefits to the employer and you as the advisor. There tends to be a little bit of overlap here, so I'll talk about them in conjunction. The advantages for the employer might not be as obvious, but they're pretty critical to know, especially when you're having these initial conversations. First, when an employer has a safe harbor feature in their 401k plan, the most critical advantage is that they're automatically exempted from the annual compliance testing that's required for all non-safe harbor 401k plans. This testing is essentially a government-mandated review of the plan whose purpose is to ensure that the 401k plan itself isn't overly advantageous to highly compensated employees at the company. A highly compensated employee is generally someone who owns or has owned more than 5% of the interest in the business at any time during the year or preceding year. Another definition of a highly compensated employee is one who made more than $135,000 in the previous year in their income. A key point to know for testing season is if the 401k plan does not have the safe harbor provision and it goes through that annual testing, like all non-safe harbor 401ks must do, and those test results find that a given highly compensated employee's contributions for the year exceeded 2% of the average contribution rate of all non-highly compensated employees, then that highly compensated employee who over-contributed will have to take a mandatory distribution from their account. And by extension, this money will no longer be accruing interest in their retirement accounts. So this is a big deal. Let's break it down. Let's say I'm a highly compensated employee and I want to contribute 10% of my salary to my 401k plan. Well, if my employer decides not to have a safe harbor provision, that means the plan will go through testing. And if, for example, after that testing is concluded, it's found that all the non highly compensated employees, on average, contributed only 2% of their salary, that means that my 10% will be out of proportion and considered overly advantageous. I'll have to reduce my contribution all the way down to 4%. In other words, getting it back in line with that 2% difference versus the non highly compensated employees. It should go without saying that this process can be very frustrating for a highly compensated employee and the employer, and the advisor is sure to hear about it if they hadn't expected it. So, again, having a safe harbor allows employers to bypass testing, really letting you and the employer breathe easy when testing season rolls around each year. Another key advantage for the employer is that any contributions they make on behalf of employees can be deducted from their corporate taxes. Furthermore, if the employee is also a participant in the plan, they can reduce their own personal tax liability with their own pre-tax contributions. They get to match those funds from their safe harbor match, and they get to use this match for their own account to write off on their corporate taxes. Finally, for the advisor, a safe harbor 401k really creates more peace of mind for you. It saves your precious time and resources. Whether it's coordinating back and forth with an employer or a highly compensated employee as to what's going to be happening with all their money, talking with the provider as well, the safe harbor provision helps cut through all of that. And then lastly, one point that often gets overlooked is that with a safe harbor match, more employees are going to want to save. And those savings rates are going to be accumulating at a much faster rate, meaning it's ultimately going to boost the plan assets for you and your bottom line. A Ubiquity Retirement and Savings 401k enables your small business clients to do so many things at the same time. They can comply with state and national retirement plan requirements. They can save a lot in personal and business taxes while lowering their taxable income, save time and avoid stress by integrating payroll and automating plan administration, offer a competitive benefit to employees, one that is the second most desirable benefit behind healthcare, and they can receive up to $16,500 in tax credits over 3 years when they open a 401k. How does that work? Well, they get credits of up to $5,000 per year, plus an additional $500 per year for automatic enrollment for the first 3 years of the plan. Now let's move on to some key deadlines for establishing a new safe harbor plan this year. There are a few different deadlines for existing 401k plans that are moving to Ubiquity that might want to add or change their safe harbor provision. If they decide to come over to our low-cost platform, a good rule of thumb is to get them talking with our team no later than late August or early September. This is not just to account for the safe harbor notices, but also because it can take time to move assets from one provider to another, as well as for us to make sure we're getting the plan provisions. For new 401k plans with a safe harbor match provision, we're coming up on it, and if your client really wants to avoid discrimination testing next year, they need to establish that safe harbor match plan and distribute what's called the safe harbor notice, which Ubiquity provides, to their employees no later than October 1st. In other words, if your client sets up their 401k plan on October 2nd, 10th, 13th, the safe harbor match provision will not be in effect for the rest of the year. Even if they plan to add the safe harbor match on January 1st of next year, they will still be subject to compliance testing for the 3 months of the year where their plan was not covered by safe harbor. Since we at Ubiquity primarily deal with startup 401k plans, we tend to get a major influx of new clients close to the safe harbor deadline. And for that reason, we strongly recommend that your client sets up a plan with us no later than September 15th. But of course, it's never too early to begin these conversations with our plan design sales team, who are here to help you and your client through the whole process. Finally, if the 401k plan is already with Ubiquity and your client wants to add a safe harbor provision, it must be set up by November 1st to take effect for January 1st. So now a little bit about Ubiquity. We've been here since 1999, focusing on helping small businesses establish low-cost, digital-first retirement plans. We've served over 100,000 participants and have helped them save over $3 billion. We pride ourselves on our competitive and transparent flat fee pricing for our clients and high quality service for all parties, whether it's the participant, the plan sponsor, or you as the advisor. We're also what's known as an open architecture record keeper, allowing you and your clients flexibility in investing. However, if what you want is to streamline things and for someone else to handle the bulk of the responsibility for investment management, We also provide you and your clients access to a handful of 338 fiduciary investment managers. That really allows you to simplify things for your 401k offering, but also it helps you and your client mitigate fiduciary liability. That concludes today's presentation. Please remember it's never too early to speak with our plan consultant team to review your client's situation. You can see our contact information here, so reach out if you have any questions about Safe Harbor 401ks. Thanks for listening and have a great day.